The moment everyone thought the market was safe, the false ceiling suddenly collapses, sending millions into shock. This is not just a simple warning, it's an alarm signaling that something massive, relentless, and destructive is unfolding. Alerts from Wall Street, JP Morgan, the International Monetary Fund, major central banks, and G20 financial watchdogs indicate that the global market is in a fragile and dangerous state, and the likelihood of a severe crash is far higher than current prices reflect. Key indices could drop by 30% or more, and this is just the beginning. Experts believe that the technology and AI bubble, unprecedented levels of public and private debt, high interest rates, and central bank pressures on financing are all creating the perfect storm for a sudden collapse, with no signs of stopping. The complex and interconnected financial structure of banks, funds, and financial institutions means that a crash in one area can instantly ripple across the entire market like a chain reaction. Even the smallest external shock, wars, geopolitical tensions, energy crises, unexpected inflation, or sudden policy changes, can trigger a rapid market downturn. Today, markets are more vulnerable than ever because tolerance for error is low and investors are in a state of constant alert. Collective psychology plays a crucial role. Once panic selling begins, no logic can halt the wave, and the crash accelerates rapidly. History has shown that when public confidence collapses, even assets once considered safe can suddenly lose value. Looking back at major market crashes, the 1929 Great Depression that left millions without jobs and savings, Black Monday in 1987 when the U.S. stock market dropped 22% in a single day, the 2008 financial crisis that started in the U.S. housing market and spread worldwide, and even the 2020 COVID market crash, we see one consistent lesson. No one is immune to risk, and even those who think they are safe can see their wealth vanish in an instant. But this time, it's different. Analysts warn that trading algorithms, minor manipulations, and psychological pressures could make the crash faster and more devastating. The combination of technology bubbles, irrational stock valuations, heavy debt, external shocks, and panic selling could unleash a perfect storm. The consequences of such a collapse go far beyond financial markets. The real economy, businesses, employment, production, and global investment could all be affected, potentially creating waves of bankruptcy, unemployment, reduced demand, and even social unrest. In this scenario, late sellers, or those following the herd, may see their investments wiped out, with millions impacted worldwide. Diversification, reducing leverage, and maintaining sufficient cash reserves are the only ways investors can somewhat protect themselves. Yet the harsh truth is that no guarantee exists. The global market is now at a sensitive and fragile moment, and every small move, every trade, and every decision could trigger a relentless chain reaction of collapse. This danger is neither hypothetical nor far-fetched. It is the reality we live in. Every second, every trade, every decision may determine the fate of millions. Now is not the time to watch passively. It is time to be prepared, stay informed, and act wisely. The global market stands on the brink of a historic and massive shift, and what lies ahead could forever change the lives of millions. This warning is for everyone who believes they are safe, because no one is immune to the immense forces of the market. The question remains, are you ready to protect your wealth in this storm, or will you become one of the victims?